how to register a subsidiary of a foreign company in India. Now, a foreign company can register a subsidiary in India and it can fully own that subsidiary, like 100% of that subsidiary shares can be held by the foreign holding company. Now, people think that 1% share or one share should be given to Indian guy. Not required. This is requirement is only for having a director who is resident in India. So a resident director is required. That director need not hold shares of the foreign company or in the Indian company. He need not hold any shares. He can be an employee also, and you can remove him tomorrow. You can impeach him. The impeachment procedure. If he resigns, it's fine, or else we can remove him forcibly also, because all the share ownership is with the foreign company. So this foreign company will subscribe to the shares of the Indian company, and then this Indian company will become the subsidiary of the foreign holding company. Now, what is the procedure? How we have to go about doing this? So, first thing is that we have to see that where this foreign company is located. If it is located in GCC countries, where these Gulf countries, then you need to take attestation of the certificate of incorporation of that company, and the resolution is required saying that this foreign company has decided in its board meeting that it will register a subsidiary company in India. So why this is required? Because see, every company, it's not a person, so it's a separate person which is governed by a board of directors. So these board of directors have to decide, and that they decide in the board meeting. So there is a resolution of that decision. So once we take this resolution and authenticate it by getting it signed from the Indian embassy in Saudi Arabia or Indian embassy in Dubai, then we can send it here, and we can say that, see, this name, company with this name is already running in GCC country, and we need to open a subsidiary in India. Just grant us a similar name, same name, with adding India to that name, and take it. Say if your name is XYZ Private Limited or as XYZ LLC in Dubai. So XYZ LLC, now XYZ India Private Limited can be opened by XYZ LLC, because this company is already running and now they are opening a subsidiary in India. So the same name you can apply and take it. Now what happens? Second thing, see, once you are incorporating a company in India, you have many doubts. First doubt is, how much capital minimum required? There is no minimum capital required in India. You can keep 1 lakh rupees capital, or you can take 1 million rupees capital. See, more than 1 million rupee capital, the fees of incorporation will increase. So incorporation fees will increase if the capital is more than 1 million. If it is up from 100,000 to 1 million rupees, same fees will be maintained. After that, there will be a gradual increase in the fee. Now, when you are opening a subsidiary, you have other doubts also. Should I open a branch office in India, or should I open a subsidiary in India? So subsidiary in India means, should I open normal partnership or private limited or something? So see, private limited only you have to open. Now that is required by law, that you can open a private limited company in India. You cannot open a partnership, private partnership you cannot open in India. You have to go by private limited only. So private limited, again, it has board of directors, then it has shareholders. Shareholders can be your holding company, board of directors can be the directors of that company, or anybody who is nominated by that company can become director here. Minimum 2 shareholders are required, minimum 2 directors are required. Now our holding company is only one, then what should we do? So 99.99% of the shareholding can be held by your holding company. 0.001% of the share can be held by the chairman of your holding company or a managing director or whoever is there. He can hold 0.1% as a nominal shareholder, and then you both can incorporate a company in India. See, my clients have other doubts also. See, the other doubt is what is the taxation? Once I am registering a foreign company in India, what is the taxation? See, taxation again depends on how your transactions will be there. 99% or 100% of the people these days, between subsidiary and the holding company, transactions are there. So almost all transactions, what people are doing is keeping a holding company outside India. They are just paying salaries in India, and just for paying salaries in India, they are opening a subsidiary company. So in that case, what happens is only expenditure is being incurred in India. There is no profit booking in India. So India is not getting any taxes. So now Indian government thinks, no, I want taxes now. How to do? What should I do? So suddenly there was a problem. See, people started panicking that how India will tax us. They want to tax they want all our global accounts and do it. So in order to avoid that panic and all that, India, what they have done is, they said, okay, we will come with safe harbor rules. Safe harbor rules means whatever salaries you are sending, you send apart from the salaries, you send around 20% extra. And on that 20% extra, we will think that this is the profit which is coming to India, and we will tax that profit at 25% corporate tax or 22% corporate tax, whatever the tax bracket you are there. So mostly 22%. So on that 20%, 22%, that is around 4.5% of the tax of all whatever money you are sending. So how am I arriving at 4.5%? So initial $100,000 you are sending, you are adding $20,000 as profit. So on that $20,000, I am taking 20% profit. So that is 100 plus 20. Then this on this 20, 25, 22% tax is the corporate tax. So 20 on 20, 22% will come to 4.4% plus surcharge and set will come to 4.5%. So 4.5% tax, $100,000 salaries you are sending every month, 4.5% tax will go, and this tax is normally what's happening is you are having a withholding tax in Saudi. That whenever you are sending, Saudi is withholding some tax. This withholding tax again, if you have proper receipts and proper certificates from Saudi government that this much tax has been withheld from the banking channel or wherever they are deducting, those people have to issue a proper TDS certificate. Then that certificate we can claim in India. So this 4.5 also you need not pay. You can just adjust against this 5% which is being deducted. And many places what's happening is, if your company is related, holding and subsidiary, Saudi is taxing at 15%. Especially Saudi Arabia is taxing at 15% for related companies. So again you have to check with your Saudi chartered accountant or Saudi tax consultant that how much tax you have to withhold before sending, and that withholding certificate you have to send to India for claiming the benefit of that taxation. So this is the taxation part. This is called its transfer pricing system. If you are selling directly to third parties from India and you are not selling to your holding company, say software, you are not selling to your holding company, you are selling to third parties, then this transfer pricing rule will not come into force. Why it will not come into force? Because see, transfer pricing is there because your foreign company and your Indian company both are related. So you might be using the foreign company and making only payments only for with non-profit purposes. For only profit part you are parking outside India, which is complete tax-free jurisdiction or lower tax jurisdiction, something like that. So India wants some taxes. That's why they have doubt that if you are having a company which is related and these related companies are transacting among themselves, then there is no proper pricing guideline, nothing like that. If it's an unrelated company, then okay, market forces are applying. You might have losses also in India, then no problem. You need not pay tax. If you have a loss, you need not pay tax. Even though you are a subsidiary of foreign company and you are selling to some third parties and you are having losses, then you need not pay tax. That also is there. Then once I am, what are the processes now when I am opening a company, what I should do, what process I have to follow. So first thing is we have to apply for the name of the company. Once we get the name, and we parallelly you send us the, you have to send me two things. One, you have to send passport copy of yours. Second, you have to send copy of a utility bill showing the latest address. Utility bill should be latest. So these two things I need: passport copy and utility bill. And once you give me these two things, I'll ask you to, because India doesn't recognize Xeroxes. You cannot send original of your passport. So what you have to do? You have to go to the Indian embassy in Saudi Arabia or in your country and get it attested, saying that no, that embassy will say we have seen the passport. This is the correct Xerox. This is the correct thing. There is no DTP done on this. You can use this. Because they will attest it. Once they attest it, you can send it to me. I'll apply for the digital signature, DIN number, and all those things, and start the process. And in this process, once our name has come, we'll apply for memorandum and articles of association. So memorandum of article of association also, again, backside last page, you have to write your name, how many shares and all that, and then you have to sign. This signature again you have to sign in front of the Indian embassy in Saudi Arabia. So these two times, two documents you have to get it done from Indian embassy in Saudi Arabia. If you are in UK or in USA, then notary is enough. Notary, and then that notary guy will get an apostille done. So notary and apostille will be enough for us. And if you are in GCC countries, then you need to take attestation of Indian embassy in Saudi Arabia. Now, many times it's happening that Indian embassy in Saudi Arabia is saying we will not attest. So you have to go to the Chamber of Commerce, get their signature stamp done. After seeing that stamp, these people are then stamping it. So you have to get a double stamp there. Your Chamber of Commerce first you have to go, then you have to come back to Indian embassy and show the Chamber of Commerce stamp on the paper. Then they will stamp it. They will put their stamp, and based on that we will apply for all the digital signature, DIN, company incorporation certificate, all that. So once this happens, once the incorporation certificate has come, there will be lot of other processes. What process will be there? So you have to open a bank account. Now once you open the bank account, you have to send the share capital amount money there, and that while sending you have to send exact amount, not less, not more, not even 1 rupee less or more. So see, while conversion there will be some difference. So if you send 1 or 2,000 rupees extra to India and ask the banker saying that you credit me exactly 100,000 rupees, any 1 or 2,000 rupees you add charges as extra bank charges and take it. I don't want it. So that way you will have an exact amount. Or else you will have to ask for a second installment payment, or you have to return the money. Say if you are sending 105,000 and your capital is 100,000, then again this 5,000 has to be sent back. Till then RBI process will be withheld. So you have to take care of that also. So once you send the money, you have to write there that it is purpose is equity shares under automatic route. So once you write the purpose equity shares under automatic rules, as soon as the money comes here, this banker gets alert that okay, now I have to take all the forms from the company and then do an RBI process and allot them a UIN number, unique identity number. So for that they will give forms. We need to submit a CS certificate. We need to submit a certificate of company secretary. We need to submit FCGPR forms, and based on that our foreign investment will be registered in India. And apart from that, we need to take a GST registration. Then we have to apply for GST exemption. We have to take professional tax registration, provident fund registration, employee state insurance registration, and then labor registration, municipal registration. All these registrations need to be done, and we have to apply for commencement of business of the company, that now company has commenced business. Then you start recruiting the employees. You have to have a contract, employment contract that we will give. You can just take that offer letter. We will draft an offer letter. We have to plan their salaries in such a way that they get a higher take home. See, what we are paying should not go to the government, should go to our employees so that we can retain the employees. So we have to plan in such a way that higher take home will be received by the employees. Once we do that and our agreements and all that are in place, we go ahead and start billing. Now say first month has come, now we are doing a billing. So when we are billing to our holding company, we have to give them a complete breakup of all the salaries and what all expenses we are giving, add 20% on that and ask them to pay that 120, say 100 rupees of salaries, 20 profit, full 120 we have to ask them to send it back to us. So this money will come to India, then from that we have to disburse all the salaries. This extra 20 rupees we will pay tax, 5 rupees, balance 15 rupees will be there in our bank, from which we will buy computers or any capital assets, car or chairs, tables and all that. From that balance amount from the profit we can utilize it, or if it's unutilized then we can send it back as dividend at the end of the year or something like that. So this part is up to this extent, and if you have any doubts you can ask in the comments. I will be happy to reply to you and clear your doubts in whatever way you want. Thank you.